Okay. Good morning, everyone. On behalf of the Governor's Office, International Business and Trade, we want to give you thank you for being part of this event. We are going to wait for 1 or 2 minutes to give everyone a chance to get into their connection. Okay, good morning again. It's 2 minutes after the hour, and to be respectful with everyone's time, we'll go ahead and get this event kicked off. My name is Shirley Temple. I'm the team lead for the International Business and Trade and Industry team in the Economic Development and Tourism Office. We'll begin with some welcoming remarks from our Executive Director, Adriana Cruz. Adriana, I will hand it over to you.
Well, thank you so much, Shirley, and good morning, everyone. Thank you for joining us today. I'm Adriana Cruz. I'm the Executive Director of the Texas Economic Development and Tourism Office in the Office of Governor Greg Abbott. And on behalf of Governor Abbott and the entire team at the Economic Development and Tourism Office, I want to thank you for joining us today for our first Let's Talk Texas webinar for international companies that are looking to invest and do business in the Lone Star State. Texas has a great story to tell, and Texas today is ranked as the #1 location in the United States for foreign direct investment. Through these webinars, our goal is to provide you with information and to connect you with resources that can help you as you find a location for your business. Today, we've brought together a great panel of experts to talk about issues that foreign companies may need to know as they consider Texas for their entry into the United States. Under Governor Abbott's leadership, our office is committed to ensure that Texas continues to be ranked as the top state in the country for businesses from around the country and from around the world to locate and find success. And working together, we'll continue the strong trajectory of economic growth in Texas. Please don't hesitate to reach out to our International Business and Trade team if we can help you to do business in the Lone Star State. Shirley, back over to you.
Thank you so much, Adriana, and you are absolutely right. We are so thankful to have these great speakers, but also to have you, all the attendees today. I want to mention that some of the questions that we received during the registration process will be answered during each speaker presentation, and also will be providing the resources link, and this presentation will be available on our website at the Governor's Office. You will receive an email with a survey that we will really appreciate your feedback on that, and also all the material for this event. Now, I want to mention who will be part of this great panel today. We have Ana Barbara Llorente. She's with Pendas International PLC, Robert Burnett with Cascio Cavazos and Newton, and John Mayer, who is a partner of Foster LLP. Now, I want to introduce our first speaker, Ana Barbara Llorente. She's a global accounting executive with more than 20 years of experience in finance management and public accounting in several industries in US and European markets. She's a CPA in the US and its equivalent in Spain. She's partner of Pendant International PLC, an international accounting, tax, and finance CPA firm, helping international companies with accounting, taxes, and financial services. Ana Barbara, thank you for joining us today.
Thank you, Shirley, and thank you for having me. So yeah, now is the turn to let's talk about taxes, right? So I would like to cover like 4 different topics, and the first one is what is a US taxpayer, or when you should be aware that you are being a US taxpayer. The most important thing here is for individuals, and we are going to talk briefly about companies also, but for an individual, usually you are a US taxpayer if you are a US citizen or you are a US tax resident. If you are a US citizen, you have a US passport, so then you are a US taxpayer. But what is a US tax resident? So for that, we are going to need to go through another 2 tests. First one is the green card holder. If you are a green card holder, you are a US taxpayer. So you are going to be treated as a US citizen. What happens if you are here under another visa or you are traveling to the US for business? So then you move to the next test, that is the substantial test. And what that means is that you are going to be considered a US taxpayer if you spend more than 183 days in the US. You have here the formula because those 183 days is covered in a 3 years period. So for example, if for 2021 you want to be, if you want to know if you are considered a US taxpayer, you have to look at how many days you spent in 2021, how many in 2020, and how many in 2019. So my recommendation for people that they are traveling to the US is that keep a good record of the days that you are in the US and do this exercise every year. Do this formula, be sure if you are going to be considered a US taxpayer or not. And why is the big deal? As you may know, a US taxpayer is going to be taxed in their worldwide income, while a US non-taxpayer is going to be only taxed in US source income. So that's the main reason. The other thing I would like to comment here is that for US people, for people that they are non-US taxpayers, sometimes they need to apply for an ITIN. That is the tax ID that you are going to need in order to file your taxes and in order to be recognized by the IRS. For the companies, that tax ID number is called EIN, Employer Identification Number. Both numbers are going to be very important also if you want to open a bank account in the US. That usually is kind of challenging with most of the banks. So we always recommend to try to find a bank that is used to work with foreigners. That makes a huge difference in that process. So again, US taxpayer, individual, you have to go through this test and be sure if you pass any of them, and then it's going to move you to be considered US taxpayer or non-US taxpayer. For companies, the other thing you have to be aware is if you are going to be doing business in the US as a company directly from your country, you have to be careful to be considered doing business in the US, and maybe the IRS is going to consider that foreign company as a US taxpayer with all the implications that means, worldwide income, reporting. So when you are planning for your operations in the US, it's very important that you understand what you are doing, if it's going to be considered a US business or not. If you are going to be better with the option to incorporate a company in the US and isolate the foreign operations. So all that is going to be part of your initial structure. And we are going to talk a bit later about what type of companies here you have in the US. So we are going to move, please, to the next slide for the second topic that we want to cover here. And these are the type of taxes that we have in the US. The main one is income tax. That depends on your if you are a person, an individual, or if you are a company. If you are an individual, the tax rates go with brackets from 0 to 37. If you are a US corporation, then you have a flat fee of 21%. Remember, I'm saying a US corporation, that's a very specific legal structure. I also want to comment that right now there is a new law coming that we expect that is going to pass before the end of the year, and it's going to maybe change these rates. Maybe 37 as individual is going to go up to 39, and corporations are going to go up at 25, I'm sorry. And it's going to depend on the income of the company. So if you are working in your planning before the end of the year, be on the loop for these changes that maybe they are going to pass before, and it's going to change all these numbers. The other concept is capital gain. So if you sell here in the US any US asset, you are going to be subject to this capital gain tax. It's going to depend if you kept the asset less than a year. That's a short-term capital gain, and that means that you are going to be taxed with the same rates that ordinary income, 0 to 37%. But if you kept that asset over 1 year, then that's going to be considered a long-term capital gain, and those are the taxes that you are going to face, 0%, 15, or 20. Again, I want to remind this that this is only for individuals. There are other taxes like payroll taxes. When you have employees and an employer, you have to pay also those payroll taxes. Another big one is that we saw in different questions is sales tax. That usually is a tax that is covered by state. So each state has their own rules for sales tax. Some states tax the people that they are the buyers in the state. Some states tax the people that they are the sellers. So my recommendation, if you're going to be dealing with sales tax, you are going to have to check by the state. They usually have in their websites what services and what goods are subject to sales tax. So the first step is go there and be sure if what you are doing is subject or not. The second step, sometimes even you don't have to pay sales tax, you need a sales tax permit. So you should be sure that you need to apply or not. And the third point in sales tax is that the rates, they change from a state, and even inside the state, they are different from one city to the others. So for that one, go state by state and be sure that what is the thing that applies to you. And my last two types of taxes are the estate tax. So as an individual, this is only for individuals. If you die and then you have assets in the US, maybe those are going to be subject to the state tax. The state tax, the big difference is that for US people, we have an exemption of 11 millions. So if all our US assets are under 11 millions, we are not subject to this tax. But if you are a foreign, if you are a US non-resident for tax purposes, then that exception is only 60,000. So again, in your planning, be sure that you are considering this. And again, for some clients, this is not a big deal. For others, it's very important. But I wanted to mention to you that this tax exists. And the last one is the gift tax that is related to the state tax, but it's like you can give a gift to any individual during the year up to 15,000. But if you go over that amount, maybe you have to file a gift tax return, and maybe you have to pay. Usually, I mean, not usually, always this gift tax, the donor is the one who has to pay it. So these are the types of taxes. If we go to the next slide, please. The other thing I wanted to focus a bit is about income tax on the income, like net profit. What is like if I'm doing a business with my company in the US, what's going to happen? So in the US, we have different types of structure, legal structure that Robert is going to talk later about them. But for taxes, I wanted to mention three. The main difference for taxes. We have the LLC, limited liability company, and we have the C Corp. The LLC is considered transparent or pass-through company. What that means is that for the IRS, the LLCs don't exist. If you are a single member, if you're an individual with an LLC in the US, the IRS is going to look to the individual directly. While a C Corp is a legal structure, but it's independent for taxes. That C Corp is going to pay a flat fee of 21%, maybe 25% in the next months. And then it's going to be a double taxation because when that C Corp wants to send the money through dividends to their owners, there's going to be another tax there. And of course, all of that is going to depend if you are coming from a country with a tax treaty with the US, because those tax treaties usually help to reduce that rate of the dividends. So when you are planning, remember to check if the tax treaty is going to affect you and what are going to be the rates for each of these companies. For partnership, we would like to mention too, because it's very common. Usually partnership are the same that LLCs, but with multiple members. So the tax idea is they're going to be transparent. The partnership is going to file a tax return, but then it's going to send to their owners what is called a K-1 for them to file their own tax returns. Next slide, please. The other thing we wanted to comment here is about what type of income you have in the US. We discussed at the beginning, it's very important that you understand if you are a US taxpayer or a non-US taxpayer. But the second thing that is very important to understand is what type of income. For the US, we usually have two types of income that is called ECI, Effective Connected Income, or FDAP. To make it easy, ECI is like a regular business. You are doing business here, you are selling services or goods, and at the end of the year, you have a net profit. And that is going to be considered ECI. While FDAP is more an investment income, like for example, you are living in Spain, but you have shares in a American company. That usually is subject to the gross amount, and it's a 30% flat rate. In the FDAP, investment, royalties, dividends, rents, usually the payer withhold that tax for you. So you, as an individual, is the one that has to come to the US, file their own taxes and try to get that money back if you are allowed to. But FDAP is always through withholding. ECI is more that you have to come and file a tax return to declare that net income that your company have made here in the US or you as an individual. Next slide, please, for the last topic is that compliance. So the first three ideas is about planning. We always recommend our clients to do that before making any decision, trying to go through all the process to understand US taxpayer, what type of income, what type of rate, what is going to apply to my US, what is going to apply to my foreign company, if I have even an individual owning my foreign company, like try to understand the tax implication from the whole ownership chain. And the second part is this, is compliance. Now that you know where you are, now that you understand your obligations with the IRS, now is the time that you have to file your taxes. In the US, usually for income taxes once per year, the first quarter of the next year. So for 2021, we are going to start filing before April 15, 2022. And depending on that analysis that you have made, then is the form that you have to apply. Like for example, if you are a non-US taxpayer as an individual, you're going to have to file a 1040-NR as a non-resident. I would like to tell you, it's very important for that foreign relationships. The IRS has several forms, and those I mentioned here a couple of them, Form 5472, Form 5471. Those are very important because the penalties are huge. It's maybe $25,000 per form if you file them late or you don't file them. So be sure that you have clear if you have to or not to file this form. And the last thing is, even you don't have any activity, if you incorporated a company here, I would say most of the times you are going to have to file, even if it's with zeros amount, because those forms, they get a lot of information to the IRS. So even you don't have any activity, they want to know about ownership and any other transactions. So again, be sure that you are going to be filing even you don't have the activity or you didn't start the activity. And with that, I think it was enough of taxes for today. So thank you very much.
Thank you so much, Ana Barbara. We really appreciate all this information. Now we are going to have with us Robert Barnett. Robert is with Cascio Cavazos and Newton since its founding in 1994. And his practice focuses on servicing business clients in the U.S. and Mexico. He works on a wide range of projects, including international trade, corporate real estate, foreign investment, energy, transportation, manufacturing, and distribution matters, and the legal, tax, and immigration issues present in U.S. and Mexico transactions. Thank you, Robert, for being with us today.
Thank you, Shirley, and thank you so much to the International Business and Trade Economic Development Office at the state of Texas. We really appreciate the opportunity to be with everyone this morning to talk about these very important legal, tax, and immigration questions. Just one addition to what you said, we work a lot with clients from Mexico, but we also work a lot with clients from Asia and Europe and South America, really all over the world. So if you could advance the slide, we could begin the legal presentation. I think one thing that's really important for someone coming to the U.S. to understand is that our legal system here is based on the English legal system, which is called common law. Many of our clients come from Spain or Mexico or Brazil or other Roman or civil law systems. And these are very different legal systems to the U.S. legal system. So it's always important, and I always tell our clients coming to the U.S. from another country to basically forget about what they understand and they've learned about legal matters in their country and open their eyes and embrace what is really a different legal system here, unless you're coming from the United Kingdom or perhaps Australia. Or one of the British colonies, you're likely coming from a Roman civil law jurisdiction where the law is very different. Here in the English system, we have case precedents. So a decision in a case that might have happened 10 or 20 or 30 years ago, it applies even in the present. So judges and juries are bound by case precedents. The prior cases are actually part of the law. Secondly, there's this question of the jury, which is a lot of people from the common law system may not understand this concept, but a jury is very interesting. It is a group of people called from the community. It could be nurses, it could be accountants or mechanics or homemakers, and they are basically called together almost every day and selected to be part of a group of people from the community who work with the judge in a case. And this is in both criminal cases and in civil cases. So if you have a business dispute and you're arguing or fighting with someone over whether the quality of a product was good, whether delivery was made on time, whether payment was fully made, if that's the nature of the dispute, those questions are questions of fact, and those questions of fact are actually made by the jury, not by the judge. So the judge and the jury work together. It's a very interesting system that is very foreign to people coming from Roman and civil law jurisdictions. So the best way to sum all of this up, I think, is to think about it this way. If you're coming from Mexico or Spain or one of the Roman civil law jurisdictions, In essence, the formality is the most important thing. The formality is here at the top, and the reality or the facts are somewhere below that. In the English system, I think it's important to realize that while formality has a role in this process, it's really the reality or the facts that oftentimes will decide the case. So very different legal systems, very different to open your eyes, leave behind your prior experiences, and learn about the new system here when you come to the U.S. to do business, and that applies to Texas as well. The next slide, please. What we see in the U.S. for our investor clients and business and trade clients coming from abroad is that they encounter an open and transparent legal system. These are the benefits. These are the opportunities that are here. And I would echo what Shirley said earlier about Texas being a #1 jurisdiction for foreign direct investment. Texas, I've lived in other states, I've worked with clients in other parts of the country. Texas has a very, very friendly and very, very favorable environment for business. And that's also, I talked about the open and transparent legal system based on reality. We talk about the availability of capital. We talk about just the size of the U.S. economy and the size of the Texas economy being the 8th or 9th largest economy in the world. It's a very good jurisdiction and a very good place to do business. And here, particularly in Texas, but in the U.S. generally, the private sector and the public sector both are strong. They both work together. There are lots of public-private partnerships. This session that we're doing today is a really good example of that. We have the state of Texas, we have the professionals at the state of Texas, and then we have private sector professionals such as myself and the other presenters here. We're all working together on this program to educate and bring information to you. But I think this is just an example of what you'll find, not only in this context, but really in many, many other areas of doing business in the U.S. and in Texas, is this public-private collaboration. The next slide, please. But having looked at those benefits, it's not perfect. You always have to, business involves risk. And any project that you're going to undertake will involve some level of risk. And that's why you and us as your advisors have to analyze those risks. Here, the differences between the legal systems of Mexico and the United States, you can fill in that blank of Mexico and put any country, really. You can, the countries that I mentioned before, the Czech Republic, Japan, fill in the blank there with any country. And you really need to understand that the legal system here is going to be different from the legal system that you came from. And if you don't understand those differences, and that's a risk. Trying to apply your understanding or your preconception of the way the law or the tax aspects or the immigration part of this should work is a mistake. It really is important to understand those differences. And frankly, one of the problems that we see, and I think our prior speaker mentioned this, is they don't do that planning before. It is absolutely essential to do the planning, and that planning really for people who are planning on coming here involves the tax planning, the legal planning that we're talking about, and then the immigration planning that John Meyer, my colleague at Foster LLP, will talk about. These considerations are all integrated and linked, and it is oftentimes at least as expensive or much more expensive to go back and fix things if you have not done the proper planning. So we really advise everyone to focus on the educating themselves, doing research and planning before undertaking their project. Commercial risk and payment, this is just basically the risk that your customers or the people that you're doing business with here don't pay you. And I would extend that into the investment context. This is the risk that you undertake an investment or you enter into a project with someone that you have not done proper due diligence on and investigated them enough. that is a risk. The U.S. is a great jurisdiction to do business. Texas is a wonderful place to do business. That's why we're here. But it is not perfect. And so just like doing business in another country, you have to protect yourselves. That's our jobs. If you are going to be paid in the future by your client, you need to have the right documents, whether they're pagares or promissory notes, whether you need to set up a letter of credit, whether you need to have other mechanisms to make sure that you get paid or that you're protected. That is very, very important. And again, a risk is not taking advantage of the services that people like Shirley and the International Business and Trade Office at the Governor's Office on Economic Development. They have lots of resources. This is one of the questions that asked me, that were asked, I think, prior and sent to us. What are the supports that the state of Texas have for, starting your business and forming a company and so forth? I encourage you to go to their website. There's a lot of great information that talks about these different kinds of entities, the process to form an entity, etc. Really good information there. Not taking advantage of the information from groups such as Shirley's group, chambers of commerce, other types of groups, that's a risk. So hopefully everyone on the meeting and on the session will take advantage of all those resources. Next slide, please. Here, when we talk about forming an entity, it's important to know that the prior speaker was talking about, corporation, LLC, limited partnership. Unlike most countries, these forms of entities in the U.S. are based on state law. So there is no federal corporation. There is no federal LLC. If you're going to form an entity, and remember, forming an entity is like creating a baby. It's a legal person. When you incorporate a corporation, when you form an LLC, a new legal person has been born. And that legal person has to be taken care of. Its books and records have to be maintained. Its tax returns have to be filed. It's almost like going to the doctor when you have a baby and you have to get their shots. It's a very similar process of maintaining the entity. And these entities are regulated by state law. So whether it's Texas, Delaware, Nevada, these are all popular jurisdictions because these are jurisdictions that have favorable corporate laws and they have favorable tax treatment. And overall, and I may be biased, I'm in Texas, but overall, I think Texas has the best. Texas and Delaware oftentimes put side by side, but Texas, because we have all the customers and the business here and it's a great state, it ends up being the choice of jurisdiction for many clients. The next slide, please. So here we have these different forms of entities. A partnership is actually not an entity. A partnership is merely a contract. This is when a group of people come together. This is an old way of doing business. Partners associate with themselves, they sign a contract, and they become a partnership. The problem there is that that's a business, but all of those partners have legal liability, 100%, to each other and to third parties. So there's no limitation of liability with a partnership. And that's why it's very, very, very uncommon to see business people forming an old-fashioned partnership. Instead, they form a corporation. And a corporation, as I said, is a separate legal person, and it has limited liability. So if I'm a shareholder and I invest $10,000 in shares in the corporation, the maximum liability that I have as a person is $10,000. The corporation bears all of the liability, not the individual shareholders. The limited liability company, it is very similar to a corporation. This is a sort of a hybrid type of figure. It's sort of a blend between a partnership and a corporation. But the good thing about a limited liability company or an LLC is that it does give the same protection of liability. So if I'm going to be an owner or a member of an LLC and I'm going to invest $10,000 in the LLC, my limitation of liability is $10,000. I will never be liable for more than $10,000. And that is obviously important when you're doing business is to manage that risk. And then thirdly, the limited partnership. This is an entity where Basically, one partner is the general partner and has all the liability and the responsibility for running the company, for managing the limited partnership. And then you have the limited partners, and all the limited partners do is they just invest and wait for the results. They do not get involved in the day-to-day activities of the company. They have limited liability. So again, if I am a limited partner in a limited partnership and I invest $10,000, the maximum amount of my liability is $10,000. The next slide, please. The characteristics of U.S. entities, you designate a name, you have, generally speaking, some amount of capital. In Texas, there is no minimum capital, and for a company, it can be 1,000 or 500 or 10,000. It can be whatever you want. The number of shareholders and members, basically also unlimited. So you can have 2 shareholders or you can have 200. It's up to you. And the administration of the entity is typically done through what's known as the board of directors or the board of managers with an LLC. And then there's a third level. So you have the shareholders at the top. Then you have the board of directors here. And then you have the officers. That would be the president or the vice president, the secretary, treasurer. Those are the officers. And so that's how companies are administered and run. The next slide, please. You also have to have in Texas a registered office if you're going to form a Texas entity. If you don't have an office in Texas, it's very easy to hire. There are many service companies. They're located in Austin, where our capital is. And for $150 or $200 a year, they will provide a legal domicile for you and a registered office, registered agent for you. Variations of capital are very easy in companies. In some countries in the world, it's a big deal if you want to increase the capital or decrease the capital of your company. It's very easy to do that here. Also, in many other jurisdictions in the world, it can become complicated to take action as an entity. You have to have very formal minutes. You have to go to a notary public. They have to be formalized, recorded in some kind of public registry. None of that applies in the U.S. Entities are largely, they're self-managed and self-operated. If the company wants to take a decision, let's say the company wants to buy a piece of property, then the board of managers or the board of directors of the company will get together. They will sign this piece of paper called a unanimous written consent, and it says we, the board of managers, or we, the board of directors, agree that it is a good idea for the company to acquire this property, period. And that doesn't have to be notarized. It does not have to be recorded. It is the act of the company just by signing and putting it in that document. Powers and authorities and facultades, as they say in Spanish. It's very easy with the U.S. company. Formal powers of attorney, very formal grants of authority, saying to a person, you can do only this, 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 and this. You're the secretary, so you can do this, 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 and this. That is not as common in the U.S. Generally speaking, people who have the authority, they can do anything that is set forth in the bylaws of the company. And the corporate purpose is also similarly very flexible. Many countries of the world, your company purpose will have this very long list of things that the company can do, and those are the only things that the company can do. In Texas, the corporate purpose, and in most other states, is the company can conduct any legal activity that it wants. And so you can see a company formed. It can own real estate. It can sell food. It can own a restaurant. It can do whatever it wants to do. The next slide, please. And I think that gets us to the end. And so I'll pass it over now to Shirley to introduce my colleague.
Thank you, Robert. I just want to mention that we'll have all the speaker information at the end, with also the links to this presentation in case that you want to go after and review all the material and all the great tips that we've been receiving. Now I want to introduce John Mayer from Foster. We know that this is one of the topics that everybody wants to hear and to learn, because it's very tied to have a successful investment in the US. John is a partner of Foster at the Houston office. He's recognized as a best lawyer in America and Chamber USA. John managed the firm investor teams focusing on non-immigrants and EB-5 solutions for multinational companies and foreign investors. He helps his clients develop a strategy for setting up businesses and investing in the U.S. He works directly with individuals, investors, and regional centers. He is board certified in immigration and nationality law by the Texas Board of Legal Specialization and is licensed to practice in the state of Texas and an active member of the American Immigration Lawyers Association. John, thank you so much for being here today.
Thank you so much, Shirley. It's really a pleasure to be here. I've had the great pleasure to work with the state of Texas over the past many years, and I'm just thrilled to join in this event. So thank you, Shirley, Adriana, and Governor Abbott for the invitation. Next slide, please. So just a little bit about Foster. We're located in Houston. We have an office in Austin, also in the Rio Grande Valley in the border area, U.S.-Mexico border area. We have offices in Mexico City, London, Beijing, Ho Chi Minh City, and we have a back office operation in Central America and El Salvador. Next slide. So today we're going to talk about B1 visa waiver for those who don't require a visa to visit the United States, and then we'll talk about work visas, L1 visas primarily, and then E1, E2 for those countries that have treaties with the U.S. And then we'll talk a little bit about the TN visa for Canadian and Mexicans, as well as the H-1B visas, which is for everybody. Next slide. Obviously, we can't really talk about immigration without talking about COVID, unfortunately. As you guys all know, COVID has affected the whole world. It's really affected the United States and its operations abroad, especially at the U.S. consulates and embassies. There was a statistic the other day that said approximately 65% of those offices have been closed on and off during COVID. And so that has created a lot of difficulty, longer processing times, but we're hopeful that we'll get this behind us somewhat soon and be able to move on. The other issue is for those who live in Canada and Mexico, there still remains the border is closed for non-essential visitors. You can't just cross the border like we have in the past. And for those folks coming from Europe, from Brazil, from India, you need what's called a national interest exception. I'm told that might be going away sometime soon. We're still waiting for that to be finalized. And then we always have to be aware of future presidential proclamations that may or may not affect the ability to travel or visas. So stay tuned on that. Next slide. So if you're going to come to the United States as a visitor for business, if you're not from a visa waiver country are those countries that don't require an actual visa in your passport. All you need to do is have a valid passport, sign up through Esta, have that approved, get on the airplane and come and visit. If you don't come from an Esta or visa waiver country, you need to have an actual visa stamped in your passport. But you can do a lot with those visas. And as Rob said, and Shirley has mentioned, I think immigration may be the first issue that you want to tackle, because you have to really understand how, in fact, you're going to come to the United States, do business in the United States, and figure out the whole visa process at the beginning. But you need to talk to Anna Barbara about the tax issues. You need to talk to Rob about those corporate issues, and you need to talk to me or a board certified attorney in immigration about the immigration issues. But you can come to the United States and set up a business. You can go to Rob's office. You can sign those documentation to set up an LLC. You could go and visit with Anna Barbara when you're here. But what you can't do is you can't work, okay? And you can't really work even if you're in the United States working for a company abroad. You cannot work in the United States at all. You can't collect a salary. You can't charge a fee for your services. And you always have to show when you come in as a visitor that you have an intent to return to your home country. That's normally a return air ticket, but evidence that you're not going to be staying for a long time. Next slide, please. So one of the first employment-based visas we're going to talk about is the L1. And the L1, the basic idea is there's a foreign company where you've been working or the owner of one of the last 3 years. You've been working there as an executive or manager. An executive is a person who supervises managers. A manager is a person who supervises professional employees. Our kind of basic number is that you have at least 20 employees on the payroll of the foreign company. That's going to be sufficient detail to show that you're working as an executive or working as a manager. Let's go to the next slide. I've got a little drawing here to kind of give you the basic idea. So the analysis starts with the foreign company. How many employees, how many professionals, how long have you been working for that company? Then we've got to look at what is the corporate relationship between your foreign entity and the U.S. entity that you may already have or you're going to be setting up. If it's a brand new company, you can get a visa for 1 year, but that brand new company obviously needs to be formed. You need to have a commercial lease, a business plan, you need to have capital, you need to have a bank account and funds ready to go ahead and start the business. Next slide, please. Once you've done that, and let's say we're now into that first year with the L1, what is the focus? The focus on L1s is really how many employees are you supervising? So if you're an executive, how many managers do you supervise? If you're a manager, how many professionals you supervise? So when we go to do an extension of the L, we need to go ahead and look at the foreign company has to continue to keep operating. There still has to be that corporate relationship. Then on the US side, we're looking at operations, billing, invoices, annual financial statements, but most importantly, the employees. How many employees do you have? Our number is usually 6 or 7, at least one manager if you're working as an executive. The immigration regulations don't give you any numbers. They just give you the basic idea of what you need to do. And so our experience tells us it's at least 6 or 7 employees. Next slide, please. What if you don't have a whole lot of employees in your business? Maybe we use the L1 to start off with because you don't have to have employees to start with or clients. But if you're from a country that there's a treaty with the United States, and again, this is somewhat limited, but if you're from a country that has a treaty and your focus is trade between the US and your home country, then maybe the E1 works. Some of the countries that have treaties, UK, France, Canada, Mexico, many of the Western European countries have them. Portugal does not. Many South American countries do. Brazil does not. But you have to show you have substantial trade between the US and your home country. Next slide, please. This slide kind of gives you the basic idea. The company is in the middle. If you purchase material manufactured from the foreign company, from the foreign country, bring it to the US and sell to your US clients, that's considered substantial trade. Or if you purchase US made goods, sell them to clients in the foreign country, that's also considered trade. And you can sum up those two. The trade we're looking for is around $500,000 per year. We can start off, if you have trade, if you have at least $30,000, $35,000 per month, maybe have 4 or 5 months of that, then we could go ahead and start the visa process. Next slide. There's also an E2 visa based on investment. So L1, remember, is based on having a group of employees working as an executive or manager. E1 is based on trade between the US and your home country. E2 only focuses on the investment side of things. Again, you got to have the treaty with the US and your home country. The investment needs to be significant. It can be in money, equipment, or assets. The business needs to be operational or at the point of being operational. Next slide, little drawing here. So US business in the middle. Our number for investments, $200,000, $250,000. The key is the money has to be at risk. If the money's not at risk, it's not going to qualify. Basically, risk is you could lose your investment if the business doesn't go well. Where risk doesn't exist is if you have money in the bank, money in the stock market, or if it's a passive investment. Next slide. What's common for the E1, E2 visas is that the US company needs to be at least 50% owned by treaty nationals. Okay, so you got to have the treaty, and then the company, US company, has to be owned by treaty nationals. And in all of these cases, L1, E1, E2, the US company sponsors the visa. Okay, you don't sponsor the visa individually, it's the company that does it on your behalf. Okay, the great thing about the E1, E2 is it focuses only on that U.S. entity, and you can bring in other nationals who share the same nationality as the owners, as long as there's that treaty. In these cases, we process normally at the U.S. consulates or embassy abroad, but there are circumstances where we can do a change of status in the United States. Next slide, please. So this is really kind of the what we do oftentimes for clients, especially those who come from treaty countries. We might start with the L1. At the end of the 1 year, maybe they don't have enough employees, so we're switching to, in year 2, a E1 option or an E2 option. Next slide, please. So TNs. TNs is important, Canadian and Mexican nationals. This is basically a limited list of professions. You have to have a 4-year university degree, attorneys, accountant, engineers, architects, economists, chemists. There's no real limit on this visa, but the TN visa is similar to the B1 visa, where you have to show that you always are going to return to your home country at the end of your visa time in the U.S. Next next slide. The H-1B visa is the visa that the whole world uses. This is the one, there's 65,000 visas and usually around 200,000 applicants. So I give you this example as probably the visa you would use if you were going to hire people from other countries to come and work for your company, but you've got to show that they're professionals or they have the equivalent of a U.S. university degree. It could be a foreign degree, it could be experience, and then you have to show you're going to pay the prevailing wage. Next slide, please. Everybody's always worried about the family. Okay, so any of the visas, if you qualify for one, you can bring your family with you. Okay, so there are dependent visas for all of these non-immigrant work visas. Okay, in the case of the L, the E1, and the E2, your dependent spouse can also get an authorization to work. So that's great. It's kind of 2 for 1 here. All of the visas also, if you want to bring a domestic worker with you, you can do that, but you have to be careful because you have to pay the salary of the domestic worker based on the prevailing wage in the United States, and that could be a lot higher than you might be accustomed to in your home country. Next slide, please. All right, so to wrap up, a couple of things to focus on. B1 and visa waiver. Visit the United States, temporary, non-immigrant, can't work. L1, intra-company transfer, right? Foreign company to the U.S. company, you have to work as an executive or manager. E1, you have to be a treaty country, and it's based on trade. So if you have trade, manufacturing a product in your home country, selling it to the U.S., your U.S. company, that can help you qualify for a visa, or your U.S. company buys a U.S. manufactured good and sends it to your home country. The E2 focuses on investment. Could be a franchise, lots of different ways to go ahead and work the investment. The TN for the Canadians and the Mexicans, and the H-1Bs, which is the visa for everybody. So next slide. I think that's it. So it was a pleasure. I also want to mention that because of the short time here, I'm very happy to go ahead and offer free 30-minute video consultations to those people who have participated in this event. And Shirley tells me that she can show me the people who actually signed in and logged in. So don't give my name to your friend, and we'll go ahead and give you a free 30-minute consultation to go ahead and help you understand the myriad option of visas that are available. So I look forward to hearing from you. And Shirley, back to you. Thanks a lot.
Thank you so much, John. We really appreciate this great presentation. We know that those are the main tips that the companies or investor needs to focus when coming to the U.S. We always, anytime that we receive a request from international companies, we make sure that they need to they need to get advice from a certified professional for immigration, corporate, and CPA. That's very important. That's the best way to succeed here at the state of Texas. So now with the question and answers, I think that I'm going to start with you, John, with these questions now that we are talking about immigration. So what should I look for when I want to hire a U.S. immigration attorney or law firm?
That's a great question. And I think the most important thing, number one, is look for somebody who specializes in immigration, and also look for somebody who's board certified by the state of Texas as an expert in immigration. immigration is an area that is fraught with problems. And what we see very often is people that decide to go ahead and hire an individual who's going to help them with their corporate and their immigration. That may not be a great fit. I've been very fortunate over the years working with professionals like Ana Barbara and Robert, and see, while we all work at different firms, I think we bring together a unique aspect. Rob is going to argue what he thinks is best on the corporate side. Ana Barbara is going to put in what she thinks the priority should be from a financial point of view, and I can give you the idea of what, or myself, or any other board certified immigration lawyer. There's lots here in the state of Texas if you want to find somebody else, no problem. But the issue in my mind is you want to have this free discussion amongst your professional advisors to come up with what the most efficient, best solution is.
Thank you, John. Now I have a question for Robert. How quickly can we register the company in Texas?
Yes, it's a relatively quick process. It can be done in 2 or 3 days. If it's an absolute emergency, that could probably be done in 1 or 2 days. But it is not a tremendously bureaucratic process. It's a process that if the pandemic were not in place, I could tell you for sure that it could be done in 1 or 2 days. But with the pandemic, there's been a little bit of a delay. But for the most important thing to answer your question, though, I think, Shirley, is the planning part. You can form a company in 2 or 3 days, but it does take oftentimes maybe 2 or 3 weeks to do the proper planning. And then once you have a structure and you have a consensus with your immigration specialist, with your accounting tax specialist, then we can form the company very quickly.
Thank you. Now I have a question for Ana Barbara. How can I keep control on my bookkeeping?
So for that one, that's a good question, because some people, they think that until they don't get like a lot of transactions of volume, they don't need to keep any records. And we always think, keep it simple. If you want to start with an Excel, you can do that, but we always recommend to have some kind of record keeping, whatever you are doing, even before you open that bank account, that bank account is going to help with the bank statements to follow what you are doing. It's very important that you use your business bank account for any business expense related. So I could say start with something easy, maybe an Excel, maybe Word with a folder with all your receipts, and then you can move to different tax accounting softwares that is going to help you with the record keeping, or maybe sending invoices, paying vendors, paying your employees. But I recommend that even we have to file taxes once per year, it's better to have like a monthly or quarterly record keeping. So when you get to that month of March or April, there is not a problem to go through all the year receipts.
And I have another question for you. Is export business subject to sales tax or selling to clients in other states? So
for sales tax, as we mentioned before, it's going to depend on the state. So for a state, even a foreign company out of the US, but another company for another state, both of them are going to consider foreign companies. So each state is going to tell you if for them you are selling from outside of that state, they are going to be subject or not to sales tax. So remember, check with the website of usually it's the revenue department, where you can check if those services or goods are going to be taxed, and then check what is the state law about if they are going to charge if your client is in that state independently if you are outside of the US, or it's going to be based on where you are. And again, sometimes you have to apply for that sales tax permit, even you don't have to deal with sales tax.
Thank you. John, another question that I have for you is, are the immigration laws different from state to state?
Another great question. You know, the immigration laws are federal laws, so they're actually the same anywhere in the United States. And so Obviously, we want everybody to come to Texas. Texas is a great place to do business, but the laws are actually the same in Texas as they are in any other state.
Thank you so much. And now for Robert, what does it take to legalize a company and operation in the United States?
Well, it's relatively simple, Shirley. It basically takes one having an office or a domicile, number one. So you have to have an address. In Texas, that cannot be a post office box. It has to be an actual address. It can be a home address. It can be a business address, but it does have to be an address. And you also have to have a registered agent. That is a person that is designated as the official point of contact for the state or for any third parties. Really, those are really the only two things that you have to have. Beyond that, the most important thing is to, I think we all keep saying it, but it is really true, is to do the planning. Do not do the brother-in-law or family recommendation. You know, I've heard that the best thing is an LLC with a jack in the box. Well, you know, first of all, that does not exist. And what they're trying to say is a check the box election of an LLC. And Jack in the Box, of course, is a restaurant. But doing a very serious business decision based on, you know, a rumor or based on family sort of input, and not listening to professionals like John and Anna Paula, that's really, or Anna Barbara, excuse me, that's really, I think, the most important thing, Shirley.
Thank you, Robert. Anna Barbara, my client intends to import furniture parts and pieces from Brazil and assemble and sell them in the U.S. What are the costs? Are there any restrictions on the operations?
So with that question, as always, is very specific to each company and their situation. So when you look at these questions, you need to focus in like the whole structure. But what I would like to remark about this type of questions about dealing with inventories, we have several clients that they are selling from their countries directly, and there is a point where they decide to start sending like materials to the US and getting here like kind of a physical presence. And thus, I would like to remark is what we said at the beginning, that that's going to trigger the permanent establishment or any kind of business relationship to the IRS. So I could say before doing any kind of that operation or that type of operation in the US, be very sure to understand the implications if you were doing that directly from your country, and plan for what is the best structure for your situation to maybe incorporate a company in the US, in Texas.
Thank you. And we have two more questions, one for John and one for Robert. The first one for John is, can I use my B1, B2, or Esta status for business development or general supervision of a U.S. entity?
Yeah, that's a great question. There's a real problem with that. Lots of people say, well, we just set up a new company and I have to get to the United States and start working there. Well, the B1 visitor visa allows you to visit, not to work, and the Esta for business also allows you to visit but not to work. So you have to be tremendously careful about that, because if immigration thinks that you're coming in to work to support the operations of a U.S. company, they're going to take away that privilege. They're going to cancel your visa, or they're going to revoke your Esta privilege, and that could be disastrous. Now, what can you do? You can come to the United States representing a foreign company and act on their behalf, okay? But you have to be tremendously careful, because if that means to come and get the U.S. subsidiary up and running and stuff, that might be a problem. So it's unfortunately a tremendously gray area. People are having problems with this every single day. But so to be very conservative, we typically say, if you're going to be visiting for business, you're going to be representing your foreign company, you're going to be attending meetings and things like that, you're not going to be involved in operational decisions, you're not going to be signing documents on behalf of the U.S. company, signing paychecks, doing whatever that is operational within that U.S. entity. So therefore, you need to be very, very careful. That's another really good question.
Thank you. The last one is for Robert. In terms of legal issues, the subsidiary or business established in Texas will work as independent entity or will be vinculated to the one in our country?
Sure. Thank you, Shirley. Good question. So if a business person coming from another country forms a Texas entity, how is that Texas entity connected or linked to the foreign entity? The first answer is, from a legal standpoint, it is not linked. It is an individual. It is a separate, distinct entity. It has its own legal personality, as I said before, and it will be treated that way. Now, if the foreign entity is an owner of the Texas entity, then there are going to be tax matters that Anna Barbara is going to need to talk to you about. There could be some legal matters involved there that are also tax matters. So if the foreign entity that owns the Texas entity is doing activity in the US other than just owning the company. So if I'm the foreign entity and I own my Texas entity, that's fine. I don't have any activity in the US. That is a passive activity to be the owner. But if that same foreign entity decides to go do some other things in the US, then that could become a tax issue, and it's called a permanent establishment. And it could also mean that you are creating some legal obligations and legal requirements in the US for the foreign entity. What we typically tell people, Shirley, is that if you have your foreign entity that is going to be the parent or the owner of the US entity, that's fine. That oftentimes is a very good structure because it protects the individual investors from having what Anna Barbara, I think, mentioned maybe briefly was the estate tax, which is a tax that applies in the US if someone dies. If you own your interest in the US company through a foreign company, and so you don't own anything individually, then that can be a good structure. The most important thing, though, again, is to manage that relationship carefully and understand that the foreign entity that owns the U.S. entity needs to stay out, and there needs to be separation there, generally speaking.
Well, thank you so much, Robert and Barbara and John. It's been great. And before passing to Adriana for her welcome remarks, I want to show, if you can go to the next slide, our contact information and resources for all our speakers. You will find it here. And also on the next slide, you will find the international team information. We are happy to help. We have our small business team that they share a lot of great information. They do every month webinars with great topics, and you can find them on our event calendar. And on the next slide, we have information from the Comptroller's Office and the Secretary of State, because this will be very useful for you. And then thank you so much, and we'll hand over to Adriana.
Well, thank you, Shirley, and I want to thank our panelists for joining us today, Ana Barbara and Robert and John. And I want to thank all of you for participating. We hope that this information was valuable to you as you consider Texas as a location for your business. And please don't hesitate to reach out to our office if we can be of any assistance. Thank you and have a great day.